Okay, so in today's lesson, lesson 7, we're going to go over a very important topic that many traders get wrong, which is if they should have a mechanical or discretionary strategy. And we're going to break this down into the 80-20 rule, and we're going to also go over some backtesting tips. You ready?
Yes, sir.
Okay, so the 80-20 rule of a strategy design is basically a retail trader like me and you, we should have a strategy that's around 80% mechanical and 20% discretionary. Meaning, do you know what this means?
I think it means going off like discretion only 20% and
Well, yeah,
using the rest.
no shit.
Yeah, that's what I think.
Okay, fuck what you think. So basically, 80% of your strategy should be mechanical, should be like robotic, should be repeatable rules and strict rules. And 20% is your real edge. It's like you know when, for example, your mechanical model fails, so you don't take a trade, for example. So basically, every trader should start out with a 100% mechanical strategy. So it should be purely mechanical. It should be like you can program it into a robot. That's what mechanical means. It means it doesn't need human emotions, if you know what I mean.
Yeah.
So there's no human emotions, no gut feeling, no intuition involved. That's a 100% mechanical strategy. And you can program it into a robot so it goes automatic. But this traders in the beginning they try to find something like this thinking they're going to make money. But in reality, for us retail traders, the discretion it's our real edge, it's our real strategy. That's where we will make our money because we don't have access to, for example, what the hedge funds and what these institutions have access to. They can make a robotic trading strategy. They can program it. They have access to crazy amounts of data and shit and resources and tools which we don't have access to. So our edge comes from discretion, which is basically your intuition, your experience. Do you understand?
Yeah.
So you start off by 100% mechanical strategy, which is like the one I've given you. But then slowly you will start developing things within your intuition and from your experience. You will learn things as you go, which will develop this discretion. For example, for me, my strategy is mainly discretion because I know the market so well. I have so much experience within the asset class I'm trading. That's why I trade mainly with discretion. It can go against you if you completely disregard the mechanical of your the mechanical part of your trade of your strategy. However, if you keep the mechanical part and you introduce discretion in your trading, that's when you will make money for real. Do you understand?
Yeah.
And for example, my discretion when knowing when not to trade, for maybe my strategy shows me there's a setup. For example, there's a long setup, but I know that this is gonna fail based on my experience, or I know that I can enter early sometimes. You understand? To get better risk to
Yeah.
reward, and this it will take time obviously to develop this. You cannot just I cannot just teach you my discretion, if you know what I mean. You
Yeah, I
you
know.
only develop it from hours and hours in the chart. You understand? So you
Yeah.
start off with a 100% mechanical strategy, and then you slowly build your discretion. Okay,
Mm.
you got
Yeah,
this
and
part.
yeah, I understand. Yeah.
Any questions so far regarding this?
No, not so far.
All right, let's move on to the next thing. Backtesting. So backtesting, I think you already know what it is. Let's just go through it. Backtesting is basically testing your strategy on past price data to see how it would have performed. Backtesting can be good, for example, when you're learning your setup. You see how often it appears and what it looks like in different contexts. It helps you build confidence. So by proving your setup works historically, you remove doubt when trading it live. It builds your confidence when trading. So you don't have to think twice before executing on your model. You understand?
Yeah.
It helps you with pattern recognition and it helps you measure your performance. So you can track your win rate, your average risk to reward, your best and worst conditions for your model. So the more data you have on regarding this, the better. But there's downside to backtesting, which is it's there's no emotions involved. There's no real money. There's nothing to trigger your emotions. So,
Yeah.
and past data, so basically past data doesn't stimulate greed, fear, or hesitation. This only comes with forward testing, which what you're doing right now.
Yeah.
Backtesting is also limited in regards to market changes. So conditions shifting, volatility, spreads, macro cycles. A model that worked, for example, in 2022 might not work in 2025. These type of things. And hindsight bias. It's easy to see the perfect entry after the fact. If you, for example, it's very easy to cheat your replay, but obviously you're doing yourself a disfavor. But you know what I mean. Sometimes you
Yeah.
can also, for example, let's say I backtest last week. I already know how last week did. Do you understand? So there would be no point in that. So backtesting is a good training ground, but it's not proof that you can make money live. That's what people need to understand. That's why it's, in my personal opinion, it's better to start with forward testing and trading live with some light risk. And then once you've gotten used to that, then you can go and backtest a specific model.
Yeah.
So now, how I personally use backtesting, I don't usually backtest a full strategy because obviously my style has a lot of discretion in it and live and with like making decisions live, which backtesting cannot replicate. Instead, I use backtesting mainly for data collection on a specific setup or specific ideas I have. Okay,
Yeah.
so for example, my last backtest was regarding the time-based liquidity, and I found many times I found, like, for example, when it fails and when it doesn't fail. So the time-based liquidity strategy that I gave you last time. Uh, so now I know, for example, when I'm trading it live, I know the odds of it failing and not failing, and I can make decisions based on that. I don't really backtest a full strategy because there's no point of doing that for me.
Yeah.
So yeah, examples like I said, how often does price respect a 50-minute orb during New York session? That's an example of something you can backtest. What percentage of liquidity sweeps lead to a displacement? Does a certain entry model like IFEG perform better in trending versus ranging markets, etc.? It's just some. Let's say you pick a specific thing you want to backtest and you backtest it to get some data on it. That's mainly how I use it, and that's mainly, I think, how you should use it.
Yeah. I mean, it's a form of studying the market.
Yes, kind of.
Yeah.
Now, the best trading backtesting software there is right now, according to me, is FX Replay. And this is just some notes regarding it. It's not really that important. You just have to look up FX Replay, make an account, and start testing it out for yourself. You can make an account for free, a free trial. I think you have it for 5 days, and then you can cancel it if you don't want to pay. You understand?
Yeah. Yeah.
Okay, so that's mainly it. Now let's go into some homework action items. So I want you, so the strategy that I've given you, the 5 minute candle rule, I
Yeah.
want you to write out your mechanical rules, okay? So the key levels, the setup, etc., the take profit, the stop loss. I want you to backtest it on FX Replay. So backtest, for example, 20 trades, and we'll go through them. And obviously, while you're backtesting, you have to journal the trades as you go.
Yeah.
Yeah, and that's really it. I think I forgot to mention something. For example, regarding backtesting, backtesting is only good when you have 100% mechanical strategy. You understand? So
Yeah.
if you're trying to test a specific mechanical 100% robotic data, if you know what I mean,
Mm-hmm.
you don't want to introduce discretion into your backtesting unless you're backtesting your strategy. You can do that, but I would not recommend it. And yeah, that's really it. Again, do the homework and will make you profitable in no time. Do you guys want to have access to the documents featured in the YouTube videos? Click the second link in the description to join our free Discord community where you will get access to the documents plus a variety of resources to help you on your trading journey.